earnings, and Mr. Kamakodi is still here with us from City Union Bank. Mr. Kamakodi, apologies for that cut-in, and thanks very much for staying back on. You've given the street a guidance of growing in the mid to high teens, 15 to 20% kind of a growth. What will drive that? And specifically in unsecured, how much of a headroom do you have given some of the asset quality pressures that lenders have been telling us seem to have abated?
We have always concentrated more on the secured front, starting with the MSMEs, commercial trading, and we added secured retail, particularly housing loans, loan against property, rental discounting and all. So these over the period of, in 2024 onwards, we have started building up the team, and around the end of 2025 calendar year, we were able to see the growths improving, and the machineries are by and large set. So we had our 21% growth for the third quarter on year-on-year basis. And we have not gone into, in a significant way on the unsecured retail so far. And that strategy will stay for many more quarters to come before we set, if at all we see on that line. But as of now, we are going purely on the secured lending on MSME, commercial trading, gold loan, and agriculture, along with now the secured retail of, housing loan, LAP, and other things. So we feel we are spending some time on setting up the team, and we never had a concept of sales team in our bank in the past. It's only in the last couple of years we have been verticalizing these sort of business lines, and the sales units and all are now set, and they have started delivering. In fact, we said year before last, it will be last year it will be making some loss, and for the financial year 2026, it will start making break even, and then from next year onwards, it will start adding to the profitability. In fact, it has started adding to the profitability this year itself, slightly ahead of whatever we had anticipated.
So we take that point, Mr. Kamakodi.
Given us confidence that.
Right, we get that. 21% loan growth doing very well, mid to high teens. You are confident that this sustains. The margins, that was a key positive of this result as well. How much of that is sustainable? Because parts of that is because of your gold loan, making it fixed rate. How much of the repricing there is left? And even deposit repricing, that's something that you've done. So if you could give us a sense on margins, basis all these factors.
See, basically, as you rightly said, we started the fixed rate gold loan year before last, and the entire gold loan portfolio has by and large converted into a fixed rate portfolio already. So we don't expect any shock. At the same time, the repo rate cut passing on, it has happened only towards the end of the quarter. So the impact because of that will be slightly higher in terms of reduction in the yield and advances. At the same time, it will get compensated by as we discussed it in the con call and all, another 2-3 quarters going forward, whatever term deposits which is maturing and repricing happening at a lower rate, we will be getting the benefits to compensate the for whatever yield reduction happening on the asset side because of the repo cut. So overall, we are confident that the whatever margin we currently have is sustainable with the plus or minus 10 basis point.
All right, the margin is sustainable. In a quick word, sir, the CD ratio at 86%, are you comfortable with that? And your guidance for what kind of deposit growth you would have? In just a sentence, sir.
See, the deposit growth will definitely be in tune with the credit growth, so that there won't be any, stoppage in the credit because of non-availability of the deposits. Consistently, we have maintained that we are comfortable with the CD ratio of about 85 to 86%, and we are in that range only currently.
Okay, comfortable with the current range, and that's where you hope to say, Mr. Kamakodi. Thanks very much for joining in with that. Pleasure speaking with you. On that note, we'll just slip into a short break. We'll get you more on the markets when we return.